Every single day without stopping to think about it, millions of people wake up, reach for their phones, unlock their screens, check messages, scroll social media, listen to music, make payments, do their work, relax in the evening, and go to sleep, never realizing that nearly every one of these actions is quietly connected to one company that has built one of the most powerful business systems the world has ever seen, a company called Apple. Apple is not just a technology brand, not just a phone company, and not just a logo people recognize instantly, but a global business empire that has mastered the art of turning everyday human habits into predictable, recurring streams of revenue. And understanding this simple truth is the first step that separates a beginner who guesses from a professional who invests with confidence. Most people remain customers for life, continuously upgrading their devices, renewing subscriptions, and staying locked into the ecosystem, while only a small percentage take the next step and decide to become owners by buying Apple stock and allowing time, patience, and intelligent decision-making to work quietly in their favor. When you buy Apple stock, trading under the symbol AAPL, you are not buying a number on a screen or participating in a short-term game of price movement, but instead you are purchasing ownership in Apple Incorporated, gaining a legal claim on a portion of its future profits, and becoming a silent partner in a business that operates at a level of scale, efficiency, and influence that very few companies in human history have ever achieved. Beginners often approach the stock market with excitement, fear, and unrealistic expectations, believing that investing is about finding the perfect moment, predicting the next move, or making fast money. But professionals understand that true wealth is built slowly by owning exceptional businesses that continue to grow, adapt, and generate massive cash flows year after year, regardless of temporary market noise or emotional headlines. Apple did not become one of the most valuable companies in the world by luck, hype, or short-term trends, but through decades of disciplined execution, relentless focus on customer loyalty, tight control over its ecosystem, and an unmatched ability to combine technology, design, and emotion into products people feel they cannot live without. One of the most important lessons every beginner must learn early is that stock price alone tells you almost nothing about whether a company is cheap or expensive, because price without context is meaningless, and professionals never judge Apple by how high or low the price looks, but by how strong the business is today and how powerful it is likely to be in the future. Professionals ask long-term questions, such as whether Apple will continue to dominate its markets, whether its ecosystem will remain difficult to leave, whether its services revenue will keep expanding, and whether the company will still be generating enormous amounts of cash 5, 10, or 20 years from now, because these answers matter far more than short-term price movements. Apple's business model is especially powerful because it is built on two massive engines that work together perfectly, where hardware products like the iPhone, Mac, iPad, Apple Watch, and AirPods act as entry points that bring customers into the ecosystem, while services such as the App Store, iCloud, Apple Music, Apple TV Plus, Apple Pay, and Apple Care create recurring revenue streams that deliver high profit margins, stability, and predictability. What truly attracts professional investors is Apple's economic moat, which means the company has built strong defenses against competition. Because once users are deeply integrated into Apple's ecosystem, switching away becomes inconvenient, costly, and emotionally uncomfortable, resulting in customer loyalty that is extremely difficult for competitors to break. Beginners often panic when markets fall, assuming that a drop in stock price means something has gone wrong with the company. But professionals understand that market corrections and crashes are normal parts of investing and often create opportunities to buy ownership in elite businesses like Apple at more attractive prices, provided the underlying fundamentals remain strong. Another major difference between beginners and professionals is how they enter positions, because beginners often invest all their money at once based on emotion or excitement, while professionals prefer disciplined approaches such as gradual buying, dollar cost averaging, and strategic accumulation during periods of uncertainty, which helps reduce risk and emotional stress. Instead of reacting to news, rumors, or social media opinions, professionals focus on Apple's cash flow generation, operating margins, balance sheet strength, and capital allocation decisions, because cash flow reveals the real health of the business and provides the power to invest in innovation, reward shareholders, and survive economic downturns. Apple's ability to consistently generate enormous amounts of free cash flow gives it flexibility that few companies possess, allowing it to buy back shares, pay dividends, invest in new technologies, and maintain stability even during global economic challenges, which is why Apple is often used as a core holding in long-term investment portfolios. The mindset shift that truly transforms a beginner into a professional investor happens when one stops thinking like a trader, watching prices every day, and starts thinking like a private business owner who would be comfortable owning Apple even if the stock market closed for several years, confident that the company would continue operating, innovating, and generating profits. Professional investors do not view Apple stock as a lottery ticket or a source of excitement, but as a foundation asset that provides balance, growth, and long-term compounding, forming the backbone of a portfolio designed to build sustainable wealth rather than short-term gains. Patience is the real secret weapon when investing in Apple, because many people fail not due to poor stock selection, but because they become impatient, react emotionally to volatility, or abandon their strategy too early, while professionals succeed by staying calm, trusting quality businesses, and allowing time to do the heavy lifting. In the end, buying Apple stock correctly is not about predicting the next price movement or trying to outsmart the market, but about aligning yourself with one of the most disciplined, profitable, and dominant businesses ever created, then giving that business the time it needs to compound value steadily over many years. This is how beginners evolve into professionals. This is how emotional decisions are replaced with strategic thinking. And this is how owning Apple stock with patience, discipline, and understanding can become one of the most powerful long-term decisions in an investor's lifetime journey.